A lot of traders completely blew their accounts trading the choppy price action and chasing bad setups this week. The truth is there were only a few good moves in the market this week that I found worth trading, so I'm going to show you guys today exactly how I found them so that you guys know how to find them next time. So we'll get right into it. On Friday morning, I had marked this 15-minute bullish fair value gap. It was one of the only fair value gaps on the 15, 30, or 1 hour that was obvious in this range right here. And I'll show you guys right where I took my trade once we landed inside of this. So as you guys can see, we are trading into this bullish 15-minute fair value gap, and we sweep this low right here. Now, I want to tell you guys a secret about looking for good levels of liquidity. Whenever you see a low inside a bullish fair value gap or a high inside of a bearish one, that's an amazing area to sweep. And as you guys can see, we swept it right here, created a fair value gap as well, and then we invert it and we V-shape. So we V-shape, that's another key. You only want to be taking these inversion setups when you're getting a V-shape after sweeping liquidity. When that happens, 99 times out of 100, you're going to run right up to your targets. As you guys can see, we had some relative equal highs up here. That was my final target, and we actually ended up hitting that in about 35 minutes. There were also some relative equal highs up here, and we ended up hitting that within about 5 minutes. So you guys need to understand the importance of marking your levels of liquidity, because when we sweep and we're delivering out of a bullish higher time frame fair value gap and we're V-shaping, that's a trade you need to be taking every single time. Now notice how there's a lot of things that I need to see before I consider taking a trade, right? We need to be trading in a higher time frame area of significance. We need to sweep some sort of liquidity. If we're looking for longs, right, well, we need to make a bearish fair value gap on the way down so that we have something to invert. And then we need to invert that with like V-shaped momentum. So it's a lot of things I need to go my way before I consider entering a trade. Now, some people might say, oh, that's overcomplicated. I completely disagree. What it does is it allows me to create an edge for myself, right? I'm filtering out the bad trades. By having several criteria that I need to see before I enter a trade, I'm protecting myself from low probability setups. Because as we can see, look right here, right? This is chop. This is about an hour of terrible price action that's happening right here. Now, some people might take this and get caught up and get screwed. I didn't take it because, once again, none of the conditions that I'm looking for present themselves here. So I'm just able to completely avoid trading price action like this, which nobody likes, and instead I'm trading the reversal like this and getting a move straight up to my targets within about 35 to 40 minutes, and I'm done with my trading day right there. Now, next up, we got Wednesday's setup, and this is a new concept that I haven't really addressed in my videos, but it is something that's very useful, and that is the concept of data wicks. So this 1 minute candle, this massive one, was from CPI. We had that on Wednesday. It was a kind of bullish report, so the market mooned. Now look at what happens. We have a low wick and a high wick. You need to be looking at the minute candle, the 1 minute candle from when the news dropped, right? So when the news comes out, you want to get the high and the low of that 1 minute candle marked out. Now the reason is because the wicks, or the high and the low of this candle, acts as a level of liquidity. And so as you can see, we actually ended up sweeping the high of that in pre-market a few minutes later. So now what I'm expecting is, since we already swept the highs, we're probably going to come down and take out the lows soon too. So we swept the lows from CPI, right? We weren't looking for the highs. We had already swept those. We're looking for the lows because they were untouched, right? We went straight up, swept the highs. Now we're coming back down to sweep the lows from this CPI candle. These wicks are like magnets for liquidity. So we move down, we sweep the liquidity, and then we move right back up. So we V-shape right out of it, extremely bullish, right? We've swept an important level of liquidity, grabbed a ton of stops. We're V-shaping right up. And once again, these V-shapes, you run to your targets 99 times out of 100. First target was this swing high before the mini dump down at open, right? We end up hitting that extremely quickly. Second target were these relative equal highs right here. We end up hitting those extremely quickly. Now, I ended up stopping out of some runners right here, but it's all good. It was still a profitable trade, and I was done with my trading day in less than an hour. So this is the thing that people don't tell you about trading reversals. Everyone tries to overcomplicate it. I'm just going to put it simply. People see this big red candle and they think that's very bearish, right? And it is. It's quite a bearish candle. Well, look, we're taking out liquidity, and then when we V-shape, we are going to make a move back up. These setups almost always present you with good continuation. That's why you take it when you confirm the inversion, right? So we confirm the inversion right here. We end up getting in. The long plays out beautifully. Now, once again, just understand the conditions of the market and understand all the factors you need to be looking for. The inversion, the V-shape, sweeping liquidity. In this case, there was not a higher time frame fair value gap that we tapped into, but these data wicks are very good on their own, and so I use those at times as well, and it played out to a T. Now, this one I talked about in a video earlier this week, but I did just want to reiterate it because it is another good setup, and I'll kind of explain to you guys why. So we have this 1 hour bullish fair value gap, and now we're going to go to the 1 minute chart. We have this tap into the higher time frame for value gap, and we've swept a ton of lows from the morning, right? We've swept this low, we've swept this low, we've swept this low. So we've swept a lot of lows. It's giving us some liquidity, and as you guys can see, we have this bearish fair value gap. Now we invert it, and we enter right on the close above. There was some strong momentum here. This is basically a V shape, so we get in, and look what happens. We have these relative equal highs all the way up here from pre-market. We get in and absolutely rip right to them. Now, this trade, yeah, it was about a 1-to-1, and we didn't get great continuation. Once again, the price action this week wasn't the best. It was still a great trade to take, right? Because we're getting a V-shape, inverting a fair value gap, and then we also had tapped into a bullish higher time frame, and once we're tapped into that bullish higher time frame, that confirms we're good to look for longs. Great opportunities were a dime a dozen this week, right? Like I said, other days we might have had much more continuation, but I was targeting conservatively because, look, this is the price action we got to start the day. Nobody should be taking this, right? Nobody should be trading in here. This is horrible price action. Once again, like I said, the reason I have so many entry criteria in my setup is because it protects me from ever trading environments like this. None of my setup criteria are showing themselves here. Now, some people don't have defined systems, so they're going to try to take trades in here and they're going to lose a ton of money. If you have a defined setup that you back tested yourself and you've proven it to yourself that it works, and you have good entry criteria that have to align with each other for you to take a trade, then you're never going to try to force trades in this right here. It's only when we get this impulsive move that gives us some type of momentum in the market and then inverse it that I try to take my trade. That is basically the moral of the story. Set a system for yourself that's defined. If you want to use mine, I would recommend it. It works very well for me. But have a defined system to where you are filtering out the bad trades. That's what a system helps you do, right? If you have a model that you trust and you back tested and you've proven to yourself, you're going to filter out the bad trades and avoid trading shit like this. If you are still watching the video, I'm sure you're interested in improving as a trader. If that's the case, make sure to subscribe and click the link in my YouTube bio. I have a free checklist in my Discord. No credit card, no email, no nothing. Just click the link. You're in my Discord. I have a free checklist to help you guys find A+ setups using my model if that's what you're into. You can also come in there, talk to me, trade with me, all that stuff. So make sure to join. Like I said, it's completely free. Join the community. I'd appreciate seeing you guys in there. Also, if you made it this far, comment inversion. Just want to see who's real, who's sticking around. But like I said, yeah, if you guys appreciate and get value out of this content, make sure to like the video, subscribe. Stick around. I have a lot more content for you guys in the coming weeks. As always, I'm going to continue cranking out content. Appreciate the support, everyone. Peace.